On this episode of Real Wins, we discuss why groups should invest in remarketing campaigns, commonly referred to as nurturing campaigns. Later, we dive into the tricky topic of how to budget an entire project for a go-to-market strategy. We wrap up the episode by discussing a few industry misunderstandings about marketing investment at a high level and tap into our recommendations when considering what is a short versus long-term marketing investment. Without further ado, let's jump in. All right, Mike, thanks for joining me today. It's great to see you again. Happy New Year.
Happy New Year, Chris. How are the holidays for you?
Well, to be honest, it was tough. We had a COVID outbreak at the Arnold household, and wasn't pretty for a few days there.
COVID, never ending.
You know, we've had it before, but my mom was visiting, and sadly, she got a pretty bad case of it, so she was down and out for a few days. I think we're all bounced back now, though, kind of getting back up to speed here in early 2024. I think your holidays were a little different than mine, though. I see some sun-kissed cheeks over there.
Yeah,
What's going on?
we escaped COVID. We saw the surge coming. We're like, screw it, we're going to the Caribbean. So we did our first ever family Christmas in the Caribbean, which was awesome. Kids loved it.
That's awesome.
Got a little fun in the sun, and now back to the reality. Walked right back into a blizzard here in Boston.
Yeah, I bet. I never knew, and it makes sense now adding everything up, but I never knew that you were a true Boston sailor, hitting I don't even know what you call it, hitting the waves. How do you describe it?
I think that's surfing, Chris. I mean, I'm not sure, but because I'm not a surfer, but I think that, yeah.
Setting your sails.
Setting our sails. I mean, maybe hitting the seas, hitting the high seas. We can go with that. Yeah. Whatever works for you.
Okay, cool. Well, I'm glad you guys had a good time.
We did.
You look re-energized in a way that COVID did not provide for me, but
well, sorry to hear that.
I'll catch up. I'll catch up to you.
Yeah, sounds good. Awesome, man. Well, I'm looking forward to these chats we have planned for sure. So I'll let you kick it off here.
Yeah, me too. I think one of the biggest takeaways we had last year was that we get a lot of common questions, and a lot of times it has to do with marketing, with brand, with go-to-market strategies, and I think one of the best things that we can do is to educate our colleagues and our audience and our kind of greater industry on some of these things that we're seeing. And so what I'd really like to do in this format is to just jump into 2 or 3 common questions we're getting right now and just kind of run through them a little bit AMA style, but just sort of I think my approach and the approach at Authentic is probably a little bit different than how Charlesgate approaches it. And I think one of the nice things about our conversations is that we always tend to end up meeting in the middle and having a nice overlap. So I want to just jump in with the first one, because this one is pretty common. I think you get this a lot too. And that's, why should I invest in remarketing campaigns? And sometimes I hear this referred to more directly as like nurturing campaigns. And so remarketing or nurturing campaigns, just this general idea that you've sort of brought someone into the fold, let's say a renter who's interested in a building, or someone who's interested in purchasing, and you're essentially keeping them in your ecosystem, right? So before I jump into a few of my points, anything that you want to set the stage there with, Mike, in terms of investing in these remarketing and nurturing campaigns, just at a high level?
Yeah, look, I mean, I think there's a couple of reasons to really think about remarketing or nurturing in not just a one-off way, but really strategize about it and put a long-term plan together. And one of those is because people are doing more research than ever online. They're not just shopping your building; they're shopping competitors' buildings. They're shopping different neighborhoods in a lot of cases, and so being able to nurture them while they're doing that and continually remind them, hey, we've got this product over here that you really should be continuing to think about, really can make a lot of sense. And the second thing is the decision to rent or buy, especially buy, but even on the rental side right now, can be a very long-term decision. We've had, over and over again, I can give you countless examples of renters and prospective renters who've come into our funnel, a year or even more in some cases ahead of time before they're ready to make their next move. And so to nurture them and remarket to them over that period of time can be extremely effective, especially after you've invested essentially a lot of time and money generating that quote unquote lead in the first place. It doesn't make sense just to let them go and forget about them. And there's a lot of ways that we can do that, both from a marketing nurturing standpoint and also a one-on-one standpoint from a sales and leasing perspective. But those are the big points.
That's right. Yeah, and I think you touched on something there at the end where we're not ever recommending one thing over another. I think as a part of a well-rounded go-to-market strategy, we certainly would recommend doing more than one thing, right? You can't just put a splash page up and hope that everyone comes to a splash page. You kind of need to work at it, hit it from different angles. Remarketing campaigns are certainly one of those approaches. But I had a few things written down here. So for me, it was four or five things. One of them was targeting your interested buyers, which you were just sort of hitting on, Mike, and we'll come back through these. Um, Thinking about risk mitigation and adaptability, really important one. We'll come back to that. Improved ROI on ad spend, enhanced customer experience, and then the fifth one was that personalization piece that you just touched on. And I think, for targeting interested buyers, being able to target individuals, renters or buyers who are interested in your brand already, that's such a powerful piece of the marketing stack. It allows you to nurture with them week over week or month over month, and it really increases those chances of conversion. One of the biggest lessons that we learned last year is that when that's done really well, you can see a property pre-lease 30, 40, 50, even over 50% before it's even opened. And in this example in my head, it's a project that's not going to open until this fall, and they're a little over 50% leased already. So that's a really powerful strategy. Do you see that with Charlesgate projects and on the buy side as well, or how much of a difference is that, do you think, from the renter to the buyer side?
So yeah, we do see it a lot, and this is why, not that we're going to talk into this in too much detail, but this is why we are always recommending starting the process earlier, because it gives you this opportunity to do effective remarketing, effective nurturing. And yeah, so we see it and have seen it many, many times work very effectively for the couple of things you just mentioned. And I know I'm sure you've got some more points to discuss, but as far as the buyer versus renting side, certainly it's even more important on the buying side, but not to diminish it on the renting side whatsoever. Just that the buying cycle is usually a lot longer, the decision cycle, than the renting cycle. So it becomes even more important. Now that said, I don't want to diminish at all how important it is on the renting side, because that decision cycle has gotten a lot longer, as well as people start to see and hear about these new developments and choosing where they want to live next. It's vitally important on both sides. Just so happens that the buying decision cycle tends to be a little bit longer even than the renting
Mm,
side.
yeah. Point two and three were risk mitigation and adaptability and improved ROI and ad spend. And those two really play hand in hand. You think about market conditions, and certainly we've had a pretty wild swing of market conditions over the last 2 years or so. Being able to mitigate your risk and actually approach different levels of the marketing stack, invest in different levels of the marketing stack, so you're not overextending into one piece of your marketing stack. Let's say the website again. Really important. Reallocating those ad budgets to high performing channels like retargeting, like nurturing, super important for our partners to be thinking about, because it really helps them obviously adapt to those market changes and also mitigate risks that are associated with over emphasizing one piece of the marketing stack. And I think that really plays into improved ROI and, of course, this ad spend topic, in that these remarketing campaigns are actually very cost effective. You get someone in once, to your point, and then they're in your ecosystem. You're serving them content, you're giving them updates on the project, construction updates and so forth. And so instead of going out and constantly trying to find a new source of lead acquisition, where can I find more leads, more and more renters, more buyers, you're actually just continuing to nurture the same ones, ultimately reducing that overall cost per conversion. So I'm curious, Mike, from you, do you see this succeed as well with your work at Charlesgate? And I guess part two would be, have you seen a shift in how commonly partners are relying on nurturing campaigns for this very reason?
Yeah. So absolutely. I mean, especially as we've seen the costs of ILSs increase over time, and the cost to generate a lead in the first place, the short attention spans and the higher cost of ads, that the more required ad spend to generate someone, to bring someone into your pipeline, makes it all the more important that you're using remarketing techniques, nurturing techniques to maximize that spend and ultimately minimize the cost per lease overall. So yeah, we see it now. I will say, across the something we've focused on for quite a long time. Across the board, though, I think generally the industry does a very poor job at it overall. I think there's definitely
Mhm.
some more uh, interest in it and maybe more engagement and actually doing it well. But I think there's a big opportunity or a big gap in the market now that isn't that opportunity for a lot of developers to think about this. And I think one word you mentioned earlier on in this conversation was strategy, right? So it's not just about, oh, implement a quote unquote a remarketing technique or implementing a nurturing. It's like all about, it's about creating that holistic strategy that works so that you're maximizing the total ability to go to market in a way that really accelerates the lease up at the most effective cost possible. You don't want to overspend, but you also don't want to underinvest because what you're trying to do here is accelerate leasing, accelerate the absorption of the product in the market, and bring forward your cash flows ultimately.
Mhm. And that really ties in, I think, to this idea of having an enhanced customer experience and focusing on personalization, right? Because for the groups that don't do this, there is none of that, obviously. For the groups who think of it as just another box to check, then they're sort of missing the point. I think it really is that strategic approach, as you mentioned. There are these layers to the marketing cake, and this is one of those that you can get really nuanced with and really leave a positive impression on a renter or a buyer's mindset as they're looking to make decisions. One of the nicest things too about the personalization piece is that you can get to understand their preferences. And so, if it's someone looking for a 2 bedroom versus a studio, you can sort of separate and segment and really serve those customers in a very nuanced and unique way that I don't know, 95% of the industry probably is not doing at all, if not not very effectively at this point. So I think you make a great point there.
Yeah, and ultimately that's exactly part of it as well, is making sure there's that great experience, whether it's through personalization or something a little bit more unique than the standard, maybe, email of like another unit just leased, please come down and see us. It's like, okay, well, that's not really nurturing. That's just spamming. And so in a lot of ways, and not to say you shouldn't use that too to build a little bit of urgency, there's some things there, but really there are so many tools and so many opportunities to build that, high touch, hospitality based, customer resident first experience from the very beginning that really just kind of, you can parlay that into the whole resident experience even after long after move in.
Yeah. I'm going to throw a curveball at us because I want to pivot to
Mhm.
the second question for this conversation today, but I want to actually jump to the oft misunderstood and commonly debated question of how much do I need to budget for a go to market strategy, this marketing strategy that we're somewhat alluding to here. I think just to kind of put a pin in it from the very start, I'm sure you
Mhm.
agree with me that this is not a one size fits all topic. There's not one answer. It's very much a little bit of a unicorny situation. But I think we'll also both agree that commonly developers are under investing in their marketing for a project. Period. Hard stop. And so before we get into the nitty gritty here, is there any sort of high level, um, you know, asterisks or fine print you want to add to this question? Because I think you and I probably get this at least once a week, maybe more. And there's never, you kind of feel like you got to grab a coffee and sit down and invite them over to have this conversation because it's not a 2 sentence answer.
Totally. And I think, again, to come back to this idea of having a strategy, I think literally what most projects are doing is just, I got to do this ILS, I got to do this tactic over here. And it's just like spray and pray. And it's okay. It doesn't matter what your budget is at that point because you don't have a strategy. So that's why you see budgets all over the place. You see, some estimates at, $500 a lease for cost, and you see other things at, 10 times that, and it's all over the board. I think what we like to do is talk about it in the sense that there's for a lease up and go to market strategy, there's the brand component, which is, you can speak to this better than I can, but a long-term asset for the project that's going to last long beyond just a lease up phase or go to market strategy. Then there's the demand creation part of the actual sort of marketing, right? The ad spend, the organic social, the organic reach, the content that you're developing, and this and remarketing and other and hundreds of other tactics that you can use as part of that strategy. That is really generating that demand that's going to walk through the door and help lease up the property. And then we have obviously the leasing costs, both the leasing team, staffing, and or concessions. You might want to think about it that way. So if you're really taking that full bucket into account, there's a wide range of costs that you can think about. Some of those are long term assets of the building, and some of those are short term to fill the property in the short term. But the way I like to talk about this and have clients think about it is that marketing is an investment, unlike a lot of the other things that try to get value engineered in a project. So for example, it makes total sense to try to engineer your windows from one Marvin to the next one, and maybe that saves you 50,000 across the project, and it's effectively the same window. It's a window is a window. I mean, there's certainly some variances and things like that, but like generally speaking, it does make sense to value engineer. You're trying to cut your costs, you try, but still deliver the same level of quality overall. In this, a lot of cases where you do that. With marketing, it's different. It's different in a lot of ways. Marketing done well with a strategy can provide a positive return on investment. So on a lease up, if you're of a 150 unit building at, say, I don't know, $2,000 average monthly rent, you've got a $300,000 rent roll. What is the return on marketing spend that you get by having a building 50% pre-leased at opening? So you're having instantly out the gate 150,000 a month of an occupied building coming in, and then only accelerating from there. So over the course of a lease up like that, you might be positive over the stabilization period, maybe even up to like $1 million. So you're talking about, if you're investing in marketing a few $100,000, that's a 3+X, 4X return on that investment. So there's a lot of opportunities there that developers are dramatically under investing in to just accelerate leasing, pull forward cash flows, pay down short-term debt, into long-term debt, save interest costs. So there's so much of a return on investment that you can drive with good marketing strategy and investing the appropriate amount. Again, depending on the project, location, demographics, style, all these other factors that come into play.
Hmm. We always kind of joke that there's this group of developers that we'll call the spreadsheet junkies. Always trying to shave costs and figure out ways to cut expenditures. But why do you think that is? And this is something that I've posed to my audience on LinkedIn. I think you've talked about it too. What is it about the sort of OG real estate world that looks at marketing and then kind of looks away, with the exception of some that are really starting to understand it? Why do you think that is? Is that just kind of an OG industry thing, is there something else there?
I think the nature of the industry is basically, for the most part, coming at it from typically either a construction standpoint or a financial standpoint, and or both. So in both those cases, there is almost no loss from saying, okay, can I find cheaper debt somewhere else? In other words, it's not, can I find lesser cost of some of these services, maybe legal or something else in certain cases, or other elements, or the example I just gave on the construction side with windows and doors, or some other element that is a way that you can just shave cost and bring projects more in line. And so I think that's just the approach that, when anyone underwrites a building or a project in the first place, it's, you're starting with, some sort of concept and putting together a pro forma. So everything sort of starts on a spreadsheet, and it all comes
Hmm.
back to that. And while many developers, especially the best ones, have incredible vision to see these projects before they're even, just by looking at a site or looking at it, which is remarkable, I still think there's that element of, and it is a higher risk too, right? They're risking a lot of their capital, investors' capital, debt, everything else. So there's a lot of risk in the development world. So I think the knee-jerk reaction is, if I can reduce cost, then I'm going to reduce risk. And so I think that's probably part of
Right.
it. But there's a number of factors that come into play. But I think by just kind of shifting and thinking about that, marketing is one of these investments. Again, and I think the other thing, by the way, too, is like, there's not many opportunities for them to find providers, that can do a good job putting together a strategy and actually take a project to
Mm.
market in an effective way. Because there's a lot of old school marketing tactics that are still, you know, 20 years behind the times. Never mind, 5 years behind the times in this industry. So there's a lot of that still. So there's still a lot of wasted money in marketing. So I think that's also a factor
Yeah.
at play here. Um, but ultimately, I think maybe the message we're trying to put out there is shifting the mindset a little bit. Hopefully more and more people see this and hear it, and see the results that are being created. through really effective marketing strategies at lease up.
Yeah, you make a really good point about partners that are not necessarily equipped to tackle the multifamily industry or the condo for sale industry. There's probably a couple, I don't know, 2 or 3 groups per month that come to Authentic and say, "We're struggling here, and here's why." And usually, I don't know, 4 times out of 5, it's because they've put together a hodgepodge of contractors or partners that just don't specialize or understand the industry and the nuances that come with it. Maybe are doing some older school tactics, like you said. But I think that's a challenge, and it makes a lot of sense that there would be some hesitation to dive in with a group that maybe is more of an investment than the other groups, just because there is that specialization and there's that unknowing about what does this mean for me and my project. But you made another good point in there, to come full circle, and maybe we can kind of end here. But there's this difference between a short-term investment and a long-term investment, in the project deal itself, of course, but I think within marketing as well. And you started to touch on it with brand. Brand is something that we 1000% believe is a long-term asset, long-term value to the project. It builds ROI. It's a business investment at the end of the day. Same thing with the website, same thing with a few other things. I think when we're talking about, you know, creating demand and nurturing, renters, is that really long term? I'm not so sure about that. I think it's maybe more midterm. It gets to a goal, it serves a purpose. And then I think with nurturing, for example, you can actually recycle that investment and use that forward with other properties in the portfolio. But I think if developers and even owner operators can begin to think about those investments as a short term versus long term, and instead of putting everything in marketing into this short term, maybe not needed bucket, really starting to think about that as something that they can tell their property brand story with. It can extend into the experience at the property itself. It's not only just this 99designs.com, $100 logo you pulled. There's meaning, there's intent, and what I'm seeing is that that really matters to the audiences out there today.
Without a doubt. And by the way, we haven't even talked about the fact that, this maybe goes back to the spreadsheet junkies comment, but I think when there's this market analysis done, it's like, okay, the rents that can be achieved in XYZ market could be 2,000 a month, and that's what it could be no matter what you're doing for marketing, right? But see, I think that's misguided. I think if you're also doing marketing very well with a really effective brand that's attracting the right audience to the building, you're gonna outperform the market in terms of rents you can obtain. Never mind just the accelerated lease up schedule. But in doing that, once you take that extra rent roll, extra NOI, capitalize that at the cap rates that they're in the market today, whatever depending on the market you're in, 4 or 5%. There's a massive amount of value that can be unlocked. Again, that's part of that return on investment because of effectively strategizing, planning, marketing, and choosing the right partner to help
Mm.
build the brand, build the demand, and effectively turn prospects into residents.
Okay, quick bonus question, because I get this from time to time.
There we go.
Not often, but I get it. Sometimes people will reach out and say, "How do I convince my XYZ leadership team to invest in this?" Because they see the value, they understand it, but maybe someone on their team, the decision making groups, um, don't necessarily get it yet. How would you lead them or recommend them um, to the to the right decision making process there? What would you say?
Yeah, I will say it's a tough one because you've got this legacy mindset in a lot of cases that is averse. Again, I think all these things are coming down to generating the returns for the lowest amount, excellent returns for the lowest amount of risk possible. So a lot of times, investing more in marketing is perceived as higher risk, and when it's like the story is, oh, why can't we just go hang some more flyers at the local coffee shop instead of doing remarketing? It just that's it's perceived as lower risk, but you and I know, because we've done this many times with success, that actually is higher risk. It might be less cost, but it's higher risk. And so how do you convince someone away from that? I think we take it from a couple of standpoints. And one is, I think if you actually do the analysis and look at a lease up period of time. I did the sort of quick back of the envelope earlier in this conversation, but saying, if you actually plan and say, how much faster can we lease this property? How much can we be pre-leased before the building even opens? How much faster can we lease this up with these other strategies, with real strategy? It clearly illustrates the positive return on investment. Now, again, that might still be, I think we still have that perception in the market that there's just, okay, if I have to, double my marketing costs that I had planned going into this thing, it's still perceived as a risk. But I think the more and more, we're talking about, the more and more people see, forward thinking developers and investors really engaging with effective marketing, the more that's going to continue to change in the market. And I think the other thing that we often look at is, I think the world is becoming more and more marketing driven over time. You see the most highly valued companies in the
Mm,
world, like Apple and Airbnbs and Microsoft, and all these companies that are really investing massive amounts of talent and capital into their marketing and into their brands. They're doing that for a reason, right? And so even on the local level, you see like really cool restaurants with cool brands that people want to go to and be at. People are attracted to that. Residents are attracted to that in the same way for the places that they live, and in the communities where they live. They want to be proud of. They want to be like, I live in a really awesome building with a brand I can be proud of, and with marketing that is nurturing and responsive to me and personalized. So I think over time, I think it's happening. And I think the people who are ahead of the curve, the developers and investors who are ahead of the curve, are going to win, especially in the short term. And especially, by the way, I think there's this perception where, oh, the market's softer, or there's, more competition in the market. So I've got to, like, I'm going to even take more risk off the table and spend, less on market. I think that's the exact wrong approach to take. Because I think here's where
mm.
you can actually win by capturing better residents that are going to renew and stay longer, better residents that are willing to pay more for a better experience, and that's how you can really win, especially when markets are softer or there's more competition in the market.
Yeah. Yeah, love it. Those are great thoughts. I it feels like a little bit of a mic drop moment. We're gonna be talking a lot more about that this year on transforming cities. I know that both Charlesgate and Authentic have a lot of great education that we want to share and spread out to the industry. So this was great, a great inaugural episode. So thanks for joining me, Mike. Today was a lot of fun. I can't wait to keep doing this more and more this year.
Yeah, fantastic, man. I love it because these are questions we get all the time from clients, prospective clients, and just to be able to answer them, put them out there, and offer some good advice out to the world is pretty awesome opportunity. And always love to get your take on these as well. So excited to hear from you.
That's right. Thanks, Mike.
Thank you, Chris. Talk to you soon.